A pump and dump scheme can be related to really anything that gets traded, but usually we're referring to it in terms of securities. Now, a stock is probably the security that most people are familiar with. Like anybody else, the fraudster wants to buy a stock at a low price and sell it at a high price. Instead of doing one of the types of analysis out there, they manipulate the market. Once they buy in low, they artificially raise the price of a stock. Usually schemes like this start with some type of lie. For example, saying a company is profitable when it's really not, saying there's a new breakthrough that's going to happen at the company, or lying about some type of buyout that might happen in the future. Once this happens, the fraudster will create buzz and energy by buying shares at a low price. When they're buying so quickly, it causes the price to rise rapidly. All the people that have been primed see this as a signal that the stock is taking off and is finally going to go to a very high price. That entices them to buy in too. With both the fraudster and their victims buying the stock, the share price rises very quickly. And this is when the fraudster strikes. They'll start to sell. Because the share price was artificially inflated, once the buying frenzy stops, the share price usually drops. The victims are left with huge unrealized losses in their account, and the fraudsters have completely closed their position at a much higher price.